Good morning, everybody, and welcome back to Beat the Bell, presented by Kane Capital. Hope you guys are having an awesome week. Happy Wednesday. Hopefully, it's been a good trading week for all of you thus far. So, a little bit of a pullback this week, and futures are red once again to start the day. So, the question is, are bears starting to gain some control? The system says so, but we'll have to see what happens for the remainder of the day. Let's bring in our panel member, starting with Money Mander. Money Mander, good morning to you. All right. We're going to go to Diamond Trades, who hopefully isn't muted.
Never muted. What's going on, team? Let's get after it.
Now back to Money Mander. See if you figured it out. And we're having some technical difficulties. So we're going to go to Stock Snipa. Good morning.
Good morning. Let's keep the win streak going. God bless America.
How was the Heat game, brother?
It was not fun.
You had 6 seats. I mean, it had to at least been a little bit fun.
The Heat lost.
We're not happy with the outcome, obviously, but it is what it is. At least you got the chance to experience it. All right, Ramsay Rippers.
Good morning. Let's have a good day today.
All right, beautiful. So, pending that we don't have any technical difficulties with Money Mander, maybe he'll figure his stuff out and we can get that cleared up. We're going to do Fed forecast and economic calendar. Diamond, take it away. Hopefully Mander's good to go as well.
Third time's a charm.
Nice. Let's start with the economic calendar. So Fed minutes released today, really the only high impact news that we've got on the schedule. But we do have GDP estimates, jobless claims, and home sales tomorrow, as well as core PCE and UMich on Friday. So the economic calendar definitely heats up as we get into the end of the week here and as we close out the month of May. So be on watch for that. The minutes release has been underwhelming the last couple of times. Really, probably like the past 3 times in a row. I feel like people sort of look for that FOMC interest rate decision volatility, and we don't quite get that on the minutes releases. So just keep that in mind. It has been like a little bit lackluster the last few goes around. Let's talk about yesterday's sell-off. So the market traded lower yesterday, really broadly lower, right? In a broad display of risk-off sentiment. Every sector ended the day lower except for energy. The S&P 500 fell about 1.1%, with the NASDAQ losing 1.3% and the Dow shedding 0.7%. The sell-off even caught big tech, which has been a solid source of strength in the market for the past several weeks. Apple, Google, Microsoft, Nvidia, Tesla, all down 1.5% or more. Market watchers and commentators are blaming the debt ceiling as the reason for the sell-off, with congressional Republicans in the White House failing to mention any significant progress in negotiations as we approach that June 1st date, the unofficial date many believe would lead to a technical default. Absent a deal, the markets are preparing for the possibility of this black swan event. So the short-term treasury yields have risen as the market prices in a greater, albeit still really small, but a greater chance of potential default on June 1st. Gold is up about 1.2% from its lows last week in the 1,925 region. And the last thing we'll talk about is PMI. So we did get flash PMI yesterday, which measures the overall U.S. economy. So the flash PMI came in at about 54.5 on the index versus May's reading of 53.4, or versus April's reading of 53.4 rather. So for May, we got a 54.5. Anything above a 50 indicates economic expansion. This is the highest reading in the United States in more than a year. And so according to the journal, the gain was led by service-providing businesses, which reported stronger demand for travel, dining out, and other leisure activities. The improvement was offset by cooling activity among U.S. manufacturers. Ultimately, this makes the Fed's position even tougher, right? It's a widely held that the Fed is going to pause rates at their next meeting in June, but the resilience of the economy amid higher rates may have them delaying their decisions to eventually cut rates, which the market anticipates will happen at some point later this year. Mander, what are your thoughts?
Yeah, well, I think, can you hear me first before I get going?
Yes.
All right, cool. I think what we've said for many months now, none of us envy the job of Jerome Powell, especially after that flash PMI reading yesterday. He's really in a tumultuous position. I think this meeting coming up, it's pretty much they consequently have gotten more and more important as data keeps coming in showing the economy is running red hot. But even after the rapid increases we had all of last year, and we've seen what they did to the over leveraged end of the financial system, you still have the economy burning red hot. NFP came in last month beating by 70,000 on estimates. Unemployment is still lower now than when they started hiking. It's at 3.4%. You have core CPI stuck between 5.5 and 6% for the past 6 months. So, and that's coming off the comp levels of last year. So to me, I mean, my 2 cents coming solely off of Powell's diction for the past couple meetings, they're viewing the tail risk of inflation being way higher than the tail risk of the banking sector and what we saw in the 3 banks that went under. So I think markets are really kind of overestimating rate cuts, especially for this meeting, but if not this one alone, coming for the rest of the year. I think right now we had a 52% majority likelihood of at least 50 basis points, so either 50 or 75 in cuts by the end of the year on a pivot. And I'll tell you this right now, if that does come, it's going to be because we're scrambling back to 0% interest rates really quickly and not because inflation's been conquered. I mean, it hasn't budged in 6 months now. The economy's getting stronger. That's the strongest reading we've had in really like over a year, like you said. So it's tough. He's in a very tough boat. But just off their diction saying the financial system is resilient and strong right now, I think that markets are getting a little too eager on the idea of a pivot here moving forward. We'll see if the pause comes, right? We only got a couple weeks left until the meeting. And really quickly to end here, one thing I wanted to note and point out amid this debt ceiling fears right now, investors have lately chosen a new safe haven to accompany gold in the US dollar, and it's A-rated corporate debt. So right now, high-rated companies such as Microsoft and Johnson & Johnson currently have their short-dated corporate debt trading at a discount to the federal funds rate. So basically, investors are saying right now they have more faith in blue chips paying their debts than the U.S. Treasuries. And so the short-dated Treasuries obviously get based off the federal funds rate, which is the lowest level that banks can borrow at the overnight repo. And right now, Johnson & Johnson is borrowing money for 3 months at a full % cheaper than banks can lend it to each other at the overnight repo. And so I want your take. I'm going to fade this for 500, Alex.
Yeah, I would have to agree. I think that the mechanics going on the debt market right now are bizarre, particularly around the whole debt ceiling issue. So I mean, we talked about this yesterday. What's your plan? Your plan is to short corporate treasuries, long some government bonds. Is that your plan?
Yeah, just fundamentally, I think this doesn't make any sense to have Johnson & Johnson trading on an August expiry short-term debt at 3.75%. The federal funds rate is over 500. In what case does that ever make sense? Like, I get the conceptual why this happened because people are resorting to elsewhere outside of the Treasury amid the debt ceiling issue. But realistically, every time this happens, even if we default for a couple of days, right, the debt ceiling will get lifted.
Maybe the default risk of Johnson & Johnson is less than the default risk of the United States government. You ever thought about that, Mander?
That's ultimately what they're saying.
Maybe Johnson & Johnson has a better chance of paying their bills in August than the United States government.
That is ultimately what they're saying. But Johnson & Johnson cannot print their own money like the U.S. Treasury can. And so I think that ceiling gets lifted. They offset it. They replenish the Treasury general account. And this is all just an over exaggeration, but we'll see.
J&J does not have the ability to print their own money. That is factually correct. That'll wrap it up for us here at Fed Forecast. Pass it back to Alejandro.
Awesome, guys. Thank you. Let's take a look at the system. So yesterday we got the sell signal with the bearish cross of the 10 SMA below the 50 SMA, and consequently the market started to sell off. Now, we are trading below the 50 SMA on both the 1 hour. So certainly a bearish picture being painted today. Today is very, very important because based on where we're opening up right now, where we're currently trading in the pre-market, we're going to be opening up at this breakout level. So same deal on SPX as on ES. The level on ES is around 4140. So around that area, which is quite literally where we're currently trading as I'm speaking here. So this is an important level or area for bulls to hold. And this is a perfectly normal pullback. We got the giant breakout. What you want to see after a breakout is a back test of that breakout area. You want to see it hold. And that way bulls can continue to take things higher. and we can move forward from there. But without confirmation of that back test, of that resistance level that was cracked, now hopefully turning into support for bulls, we don't know whether or not it was a false breakout or not. So today is sort of the day I've been waiting for and anticipating. So it's going to be very important for bulls to hold this level. So the point of me saying this is because yesterday the system provided a really nice trade had you gone short on the sell signal on the break below the 50 SMA. Now, you want to see more confirmation today. Again, just look left on the chart. You can see how we're coming into this choppier region. You can see how this is the breakout level. And you'll see when we open today that that's right where we're going to be trading at. So it's important to watch what happens there. Probably not the spot to be shorting into just because there's a lot of support in this area. But if this area fails, that's certainly going to be a good sign for bears who are looking to take things lower. All right, so that's going to do it for the system, guys. I'm going to pass it over to Ramsay Rippers for Bet the Bell.
For the system, I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. All right, guys, let's get right into it. Ryan, pull them up. Pull them up for the team. Hondo in the lead. I believe it stays the same. You and Diamond chose green on Monday, and we closed green 3/100ths%. We were up like 10 to 14. I believe it was like a 14-cent. Green day on Monday. Highs Friday 42.12. We're down about a little bit over 60, 70 points over the last two sessions. What do we got today, guys? Green or red? SPY and Qs are down slightly, I believe a little bit more than a point respectively on the SPYs, and Qs almost 2 points, down about 0.5%. What do we got today, Hondo?
I'm going green today. I think that we see a bounce from this breakout area.
Sweet. Mander.
I'm going to take red. Same sentiment. Whether we come down here and base at support for another leg higher or continue the flush, I don't know. But I think it's going to be too much of a gap to flip this all the way red to green.
Diamond.
So this is a tough one. I want to go green. But I think this is a great opportunity to get back even with Alejandro if the market closes red. So I'm going to go with red. I'm rooting for green like internally, but I'm going to go red as a strategy play. That's the plan.
I like it. So basically, so you're really going green, but you're just going to go red just because.
Yeah, I'm going to go red for look, it's a strategic move. Obviously, I hope that we end the day green because I think that if we do, there'll be some really nice trading to the upside that I'm going to be able to take advantage of. So like internally, I am rooting for green. But strategically, I think that going red here, down 1% on the day, I could be wrong about the bounce, who knows? And if I am, then at least I'll have a silver lining in getting back even at the top of the leaderboards in Bet the Bell. So,
gotcha. Fair. Snipe.
I'm going to take red.
All right. Beautiful. We will go on to our second question. It's been a classic the last few weeks. Give me a name, give me a level, and tell me, does it close over or under that level? Snipe, we'll start with you.
I'll say SPY, and I'll say under 420.
Today.
Okay, I'll say SPY under 416.
Gotcha. I want a better level than that. Come on, we're trading at 412.
Same bet. It's 4 points already.
Bro, I'd say. Okay, SPY. I'll even give it 415, man.
All right, Mander, what do you got?
I'm going to take Tesla. I think this goes under 180 today, trading at 182 and some change in the pre-market.
Hondo.
Mine is going to be Tesla over 185.
Wow.
Hopefully, you can take profits on your puts at the open here, and then we'll both be happy. This team has shown a lot of relative strength over the past few days. It's in a really strong uptrend on the higher time frames. So I think we could continue to push to that. Going along with my thesis that I think we get a bounce.
Gotcha.
In the broad market.
I will go NVIDIA over 304, trading at 302.8 in pre-market. 2 consecutive red days so far. And they have a gap to fill down to 302. We'll look for that 300 level to hold support, and then close back above 304. This is today.
Yeah, this is by the end of today.
I'll go 303.
303. All right, cool. I'm gonna tap in on this one. I'm gonna go SPY over 360. I think that.
What?
No, I'm joking. I'm going SPY over 412.50. I like this 30-minute level that we have, specifically last week's resistance 413.60. I got another one down at 412.50. We're testing that right now. I believe we're going to hold. I'll go 412.80. SPY over 412.80. That's my level. That's going to do it for Bet the Bell. Hope you guys enjoyed it. We'll pass it back to Alejandro here.
We're going to have to come up with some rules for that particular segment, the over-under, because I can't be out here,
2.5 points out,
risking my stones, 3 points, and this man's saying SPY over 412.50 when we're trading at like 412.48.
Honestly,
right.
and I would like to chime in here. I mean, Ramsay, I don't like the dynamic that he's just allowed to tap in whenever he wants. Like, he doesn't have to.
I was thinking the same thing.
Life
I
on
was
the
like,
line for green or red, like we do every single morning. But whenever he feels that it's necessary, whenever there's no consequences to being wrong, he wants to throw his hat in the ring. And I just don't think that that's appropriate, to be quite honest with you.
And he's out.
Get him out of here.
And he's out. All right, guys, that's going to do it for this morning show. Appreciate everybody who tuned in. If you're watching on the YouTube, like and subscribe. That helps us out a ton. If you'd like to trade with us, we trade live all day, every day on voice. Live alerts, entries, exits, the whole 9 yards at Kane Capital. You go to kane-capital.com to try our 7-day free trial, or you can scan the QR code right there that's flashing in front of your screen. Very cool stuff there. Other than that, guys, have an awesome rest of your day. Trade smart, manage risk, and we will see you on Friday morning at 8:30 a.m. Eastern time. Have a good one, everybody.